interesting.
So I got a question.
Yeah.
So like, say a person wants to start off with like a business, right?
Yeah.
Out of all the S corp, C corps, and LLC, right? Out of all three, I know it might be situational.
Yeah.
But like your basic entrepreneur just wants to sell stuff on eBay, right?
Okay.
Or Amazon, for
E-commerce.
example. Let's just e-commerce. Let's just use that example. What would you recommend? And then after that, what is that level that they might reach until they might want to think about switching over to like, say, a different corp?
Yeah. So I would say it is situational based, but let's just say you're starting out an e-commerce business and you don't have the intention starting out to eventually sell this company for a multiple. Well, we'll probably start out with just a regular basic LLC. Like, we just need to get our feet wet in entrepreneurship. And the LLC is the easiest entity structure to establish and manage when you're getting started because it has the least filing requirements and the least complexity of all the entities. But once your business starts profiting, meaning net business revenue is around 50 to 60,000, that's when we switch you out of the LLC and we upgrade you to an S corporation. Because now we don't want all of your business's profits being subject to self-employment taxes. We want you to take a salary out of your business, and that'll be the only amount that's subject to self-employment taxes. And the benefits don't really outweigh the cost to switch over to an S corp and pay S corporation fees until your business is about 50 to 60,000 in profit. So I would say that's the benchmark to when someone would jump into the S corp. The benchmark between someone jumping into the S corp and a C corporation is so convoluted because it might make more sense for someone to stay in an S corp depending on what their goals are and establishing a C corporation as a management company, or if they truly are going to be a business that's going to become a publicly traded company or they want to sell their company, we might look at transitioning to a C corporation when they're doing more than $2 million in profit.
Yeah.
Yeah.
So like, say if like a person like in that thing, they start off their business and they're starting to make some money.
Yeah.
And they haven't really like reported anything yet because they don't know. Say if they've been dealing with cash, right? Because a lot of people like to sell stuff like just, you know, on eBay, like not on eBay, but like offer up, for example, for like going to yard sales or picking up some like J's and just flipping them and stuff like that. And say if you get like paid cash. Yeah. Say you're like in 1 year, you already made about 50 G's, 60 G's, but it's under the table.
Yeah.
If you want to go ahead and you want to just start making that legal, right? And say you already have an LLC. You have your basic LLC.
Yeah.
And you're chilling. Say if you're banking with one of those big banks like Chase or Wells Fargo. How would you then go about putting your money into the account to then make it basically legal?
Yeah, absolutely. So let's just say I received that $50,000 directly to me cash. It's underneath my pillow right now.
Yeah.
I would need to go to the bank that's underneath that EIN number LLC and tell the bank, this is all business cash. This needs to be deposited with you guys. Now, they might be a little bit suspicious that you're walking into the bank with $50,000.
Yeah,
some bankers would be like, hold on a second, we don't take all this cash at once. But you could definitely make your banker do that. And if they do take on the cash, then that money gets deposited into your business bank account. When you file tax returns, it's underneath your EIN number. So you have to report the income that the business made in the year. Even though Karlton may have earned the income January through August, just doing transactions with people in person, if I put that money in my business's bank account, it's as if it's been there since January to the IRS.
So it doesn't matter if it's December.
It doesn't even matter if it's December.
Oh my God.
Yeah.
Okay.
And that's reportable income with a tax consequence if you don't have deductions that work against that income.
So say if like, my bad to cut you off here because I think you wanted to say something. Wow. But what happens in this case if like I put in the $50,000, right? And then I want to have some sort of deductions. So I have my personal car.
Yeah.
Can I then rent out my personal car to myself from like my personal, I'm renting it over to my business for like a daily rate?
Yeah, but you could just allocate it over to the business and just receive the deduction based on the business use. So in order to write off a vehicle for business, it needs to be more than 50% business, 51%, 52%, as long as it's more than 50% business.
How can you prove that?
The IRS will require you to document. So when it comes to documentation, it's two different ways. You can track your actual expenses, so your car payments, your car insurance, your tires, your car washes, or you can track mileage. And the IRS lets you take, I think, about 65.5 cents per every single mile you drive. So let's just say you're driving Monday through Friday, but then on weekends you're personal. Okay, well then we can divide up based on, the 365 days in the year, how many days that you were driving that were business related relative to the amount that were personal, and then we get to calculate that on your tax returns as your professionals. Does that make sense, guys?
Yeah.
No, it does.
I wanted to bank off of his question about, depositing a lump sum into the bank.
Yeah.
I know for personal accounts, I don't know how it is for business accounts, if it's any different, but I know for personal accounts, if you deposit anything above 10K in cash, the bank has to report it to the IRS that you've deposited lump sum. Now, for a business account, is that rule apply, or does anything going into the bank be considered as
Business income.
business income?
Not anything going into the bank is considered business income, because as a business owner, you can self-fund your business in order to get it started. Maybe I was starting a McDonald's. I had to buy fryers. I had to buy oven mitts. I needed to buy, raw potatoes. I'm buying all these expenses, but should I put that underneath my personal? Or if I'm starting the business, shouldn't I move some of my savings over into my business so everything is done inside of my LLC, and then take the deductions inside of my business? So the money that I moved over into the LLC, that's called a capital contribution. That's an asset on the books, which means I'm not going to be taxed on that money. I have to be reimbursed that money once my business is profitable. So even though I put 50 G's in it and it's a capital contribution of my own funds, my first $50,000 that I earn on top of that's not taxable, because I put in 50 G's until I start taking that money back out in the form of a reimbursement. That's called an accountable plan, is what the IRS calls that, because you need to account for the income that comes in and reimburse yourself back via the LLC.
Now, is there a certain time period from when you open up your LLC, let's just say, for example, in this example, is there a certain time period where there's like a cutoff, where it's like, let's say, for example, it's like your second year into the business, right? And you were like, oh, here's a lump sum of cash that's going to be, capital. Is that allowed, or is it like, buddy, that should have been like obviously in the beginning of when you established your LLC? Does it still work?
Oh, absolutely. Let's just say, for example, and obviously the IRS is going to want you to report 100% of all the income that you earn. But let's just say in 2022, I earned all of this cash and I wasn't responsible. I didn't follow the IRS rules and report the business income. But then in 2023, I want to grow my business. I want to report stuff. So then I deposit all that income in 2023. It probably would have been better for me to report in 2022, because I probably would have gotten more deductions, since deductions go down every single year with the current tax laws we have in place. But I'm reporting it this year, so I'm going to pay taxes on it relative to when I file my tax returns. The IRS isn't, at my house looking underneath my mattress. They're trusting that I'm going to follow the law based on what they put into place. So if I do report that income, that's taxable to me when I choose to report it.
Do you think a business owner should know all these things, or should they just focus on making money and just hiring guys like you?
I think it's twofold, right? I think that when you're getting started out in business, you should know how to bake the cake. You should learn how to practice with the ingredients before you say, okay, here you go, I'm going to let you bake this cake for me. So if you want to be a successful business owner, I think to a certain extent you have to get your hands dirty just a little bit. You should understand how to read your own tax return. You should understand what a business deduction is, what a business credit is. You should understand what is remaining in compliance with the IRS versus not remaining in compliance with the IRS. So that way when you turn this over to somebody, you know whether or not they're actually doing things at least according to the standards that you know. And then, of course, they'll educate you on some of the areas that you don't.